Well, welcome back. Russ Whitney here, and welcome to my office and my humble abode. Today's training is about circumstance and opportunistic real estate. And I've had a lot of debate over the last couple of years on this strategy because you guys, when you get out on the internet here, you're going to see all kinds of stuff out there on wholesaling, lease optioning, commercial investments. There's lots of this is gimmickry. I just want you to know it's a gimmick. If you want to get started, you want to build some cash flow, you want something that's steady, where you're not pressured every day, and you want to build a realistic business, then circumstance and opportunistic real estate is the way to do it. And here's what I mean by that. We're not looking so much for a wholesale deal or a foreclosure deal. If those come along, that's great. It's good to know about those, and I'll give you plenty of training on all of that. Again, what we're looking for is a distressed property and a motivated seller. And that can come in a duplex, a triplex. It can come in a trailer, a mobile home, a manufactured home. It can come in a hotel, a rooming house. There's all types of opportunities. Now, remember, what I'm going to train you on is what you need right now. And starting, a lot of people need cash and cash flow. So what I want to talk to you about, first of all, is building your financial independence. And that really is finding some multiple units, duplex, triplex, 4-unit, 6-unit, 10-unit building. So I'm adding up rents, I'm deducting expenses, which I've given you that formula in the quick start, manual and guide. And we're looking to get our $2,000 to $5,000 a month in positive cash flow coming in that we know we can count on every single month. Now, I'm just going to tell you that when I first got started, one of my mentors was a guy named Mark Harrelson. And I got to tell you that Mark was here yesterday. He actually flew in from Utah to work with us on these training programs. Mark is a guy who wrote the first book that I read, which is called How to Wake Up the Financial Genius Inside You. Great, great, great book. And it had some really good tips. Some of them I've used them for my lifetime, So this is something I learned 30 years ago and have used for a lifetime. And it's still usable today. I mean, leveraging, compounding of money, how money works. Think about that for a minute. How does money work? We just think we get dollars and we spend them. Man, there's a way to get your money to make you money, to get the money to do the work instead of having to put an hour in for $1. So we had this debate because when I first learned from Mark, his idea was buy, 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 never sell. So in other words, buy duplexes, 4-unit, 6-unit buildings, get your cash flow coming in, which made a lot of sense, but don't sell them was his strategy. And his strategy was to do what we did, and that is take rundown, beat-up property, paint them, clean them, raise the value, okay? So in other words, we have the forced appreciation. As the equity built, in other words, as the property is worth more money and we owed less, then refinance the property or take a home improvement loan, which is one of the strategies that I kind of developed myself, and then pull the money out of either an equity loan or a home improvement loan. Now you still have the property, you still have the cash flow, maybe a little bit less, because if you borrow more on the property, your payment's going to be a little higher, so that you reduce your cash flow a little bit, but you still own the property. Now as we're collecting rents, the property continues to go up in value, and so we continue to build equity, but we have our cash flow. But I got to tell you something. The wholesaling strategy goes against that principle. And there were times, in my very beginning years, that I only knew what I read. I only knew what people taught me, which is like today. I mean, you only know what I'm telling you. And so along the way, part of what I like to do with my students is I like to teach you how to think. You know what I mean? Just because I have a certain way that I do things, it doesn't mean it's the only way to do it. I love seeing different strategies and ideas that make sense, that fit into a business plan, so to speak. And remember, the plan is to build a net worth of $1 million. The plan is to build net cash flow, so I don't have to wholesale or depend on selling a property or else I can't pay my bills. I don't want that kind of stress and pressure. The object of real estate is to take the pressure, particularly the financial pressure, off. But I will say this, along the way, there were times, and I told this to Mark yesterday, I was saying, there were times that I had some properties and I could have sold them and made a $20,000 or $30,000 profit. And you know what? That would have been critical to me because as I continued to invest, I had a lot of equity and I had the cash flow, but I didn't have big lump sums of cash. And you know what? Today, maybe that was better because if I didn't have the proper training, I've seen lots of people get into, a lot of people that, go to some of these other, get-rich-quick type schemes, so to speak. And all they do is wholesale because they get into quick dollars, but then they're spending that money as quick as they can get it. Well, as soon as the market drops, as soon as there's an economic cycle that drops, like we've been in here the last few years, wholesaling kind of dies down. And now all of a sudden I have no cash flow. You know, I'm not building any equity. I'm not building a long-term future. So here's the strategy, you know, plain and simple, is everything today that I own is for sale. Now, I want to keep certain of my properties for the cash flow, but if someone comes along and I can make a good, quick lump sum of money on the property, I'm going to really consider that seriously, and I think you should too. Sell it. You can make the money, sell it, and then you take and reinvest. You go out and you look for another low, moderate income type property that you can generate cash flow from. Now, here's a rule of thumb that I've used. Let's just assume you buy 10 properties, okay? And I'm going to use that ratio because out of every 10 properties I have, I'm going to say that 7 or 8 of them work beautifully. The cash flow comes in. I have great tenants. There's some maintenance and upkeep to them, you know, along the way, no question about it. But out of every 10, if let's say 7 or 8 work great, there's always 1 or 2. And if you own property, you'll identify with this. You know, there's always 1 or 2 where the tenants are slow on the rent, or there's always a maintenance problem. Always seems to be a problem with some of them. You know what I do? The strategy I've developed is I sell those 1 or 2 off, get rid of the dogs, and I keep those cream of the croppers. I keep cherry pick the good ones. So the ones that never have a maintenance problem, they cash flow all the time, we got the great tenants, we keep those. Guys, the beauty of those is today, you know, if I'm in Europe, those tenants are still paying the rent. The property is still going up in value. As they pay the rent, I'm reducing the mortgage, which means I'm building equity, and I get a tax shelter from them. I get to write off the depreciation on those properties. So the simple lesson for today is, first of all, we want to focus on circumstance and opportunistic real estate. And that is, I want to look for distressed properties with a distressed seller. And cosmetic distress, remember, I want to do the least amount of work that could give me the most amount of cosmetic improvement. That's generally paint, cleanup, landscaping, you know, new carpets, nicer countertops. And we don't want to improve them. You know, we don't want to put gold faucets in the sinks, okay? But we want to make them clean, safe, affordable housing. So circumstance, opportunistic, I'm looking for a cosmetically distressed property. I'm looking for a distressed seller, partnership dispute, you know, a divorce situation or what have you. And then I always want to keep in mind that everything is for sale at the right price. You know, if I get the right seller or the right buyer to come along and I can make a profit, I want to take that. Now, I want to cherry pick my good ones, the ones that cash flow every month, the ones that there's never any maintenance, never any problem with. I'm going to keep those long term. Let those just build and build and build. Now, I'm going to give you the last tip on this, and that is, listen to this. This is a cliche, okay? $1 million in debt is $1 million in net. Say it again. $1 million in debt is $1 million in net. Now, what does that mean? Well, let's talk about the worst thing that could happen to me. Let's assume I buy a property worth $1 million. And take it to 100,000 if you want. You know, let's get 10 of those over time, whatever it is. Well, let's assume that property does nothing more than break even. So it's a $1 million property. I put a little bit of money down or no money down. So I owe $1 million on it. Let's say it has a very little bit of positive cash flow, not a lot, pays for itself, and it makes me a little money monthly. I collect the rents every month. I pay that $1 million down over 20 years. And let's just assume I have a $1 million mortgage. So I'm paying it off every month. The worst thing that could happen to me is 20 years from now, let's just assume it doesn't go up 1 nickel in value, which is hardly likely. It's probably going to appreciate dramatically. But let's say it only goes up, let's say it goes up none, okay? So 20 years, it's still only worth $1 million. However, I've collected the rents, and each month I've paid the mortgage down. So I've gotten a benefit from, a tax shelter on it. But now 20 years later, it's free and clear. So I now own $1 million property that's free and clear. The worst thing that can happen to me is I become a millionaire. Now, guys, that's the worst case, most dramatic, non-success example I can give you. But it just goes to show that real estate is probably the smartest, simplest investment for average folks like you and me to build a net worth and to build a comfortable lifestyle, to ensure that our kids are going to go to the colleges we want them to go to, that we're going to retire okay, and that we're going to lead a decent life, man, that's not full of struggle. And if it has struggle, we find the solution to the struggle, and we open the door to the next opportunity. I hope you learned something from this. This is Russ Whitney signing off.